a lot of people did a lot of things wrong, but there was plenty of it in Wall Street. Plenty of it in Wall Street. But there was plenty of it elsewhere too. I want to emphasize that. But Wall Street made a lot of money out of doing a lot of things that contributed to the crisis.
Here's my point.
The rate of inflation has absolutely gone out of control, and in order to make ends meet, many consumers have been forced to take money out of their savings account and rack up credit card debt. Products and services are becoming more expensive. As a result, what one can get for $1 now is less than it was a year or two ago. American families are currently grappling with increased expenditures for things like food, petrol, and housing, to name a few. How can one live debt-free and thrive under these circumstances? Is it possible to stay afloat in our current financial catastrophe? Fortunately, Warren Buffett, the renowned billionaire investor, has revealed his secrets that have helped him amass his great wealth. So join us as we discuss Warren Buffett's secret to overcoming high inflation: index funds. Warren Buffett strongly backs index funds. They provide simple, effective diversification. Index funds, which are investment portfolios that duplicate a particular market index like the S&P 500. On May 20, 2022, Buffett said, "Owning the S&P 500 index fund is, in my opinion, the wisest move for the majority of people. You can buy a diversified section of a market or industry with low-cost index funds, which frequently have lower expenses than actively managed funds. It spreads out the risk involved with your investments, which is essential during turbulent times. It can be expensive, time-consuming, and dangerous to actively manage a financial portfolio by buying individual stocks or stock picking. Just as San Francisco-based financial advisor Kevin Cheeks points out, most professional money managers are unable to consistently outperform the market. So despite having a few good years, 70 to 80% of fund managers will underperform the stock market. Cheeks claims that putting more money into an endeavor that might not succeed in the long run would result in less contribution to your portfolio." When questioned about stock selection, Buffett responded, "Charlie Munger, vice chairman of Berkshire Hathaway, and I haven't the foggiest clue what the stock market was going to do when it started on Monday. Never have we. I don't think one of us has ever suggested or been considering that we should purchase or sell based on what the market is likely to do, or for that matter, what the future holds for the economy. That's because he practices value investing." Value investing is occasionally a smart move. Buffett urged investors in 1974 to invest in a company because you want to own it rather than because you want the stock price to rise. The worth of a firm can be evaluated to help investors decide where and when to invest. Value investing involves buying high-quality stocks, ideally at a bargain, and holding them for a long time. Additionally, there is investing in accordance with your principles, which involves taking into consideration your social, religious, moral, or environmental beliefs when making investments. Buffett has used both strategies to moderately succeed for himself. For instance, according to Buffett, Berkshire Hathaway purchased 15 million shares in Activision Blizzard. The purchase, in relation to the values of Berkshire Hathaway, was one of the most recent examples of Buffett's strategy, which entails buying undervalued shares at a favorable price rather than securities with large growth potential. 4 industries have received top priority from Buffett: energy, Appleby, NSF Railway, and insurance. In his 2021 letter to shareholders, Buffett refers to the railroads as the main business artery of America and a crucial resource for both the country and Berkshire. Buffett's investment is based on his conviction that railroads contribute to a better society and have favorable environmental effects. He said that if the various vital items being conveyed by NSF were instead shipped by vehicle, carbon emissions in America would skyrocket. Invest in good businesses with low capital needs. Buffett has long supported holding companies that provide significant returns on the cash put in the company. Businesses with modest capital requirements that are able to keep their profits should perform better during inflationary period than those that must invest more money at even higher prices merely to hold on to their position. Buffett recently compared facing inflation's difficulties to running up a down escalator. Take a look at tips. For investors who are worried about growing inflation, Buffett also recommends Treasury inflation-protected securities, or TIPS. TIPS offers investors a fixed interest rate that is paid twice annually. However, The principal is also adjusted for inflation using the Consumer Price Index. Steer clear of traditional bonds. In his 2020 letter to Berkshire's shareholders, Buffett stated that bonds are not the place to be these days. Bond investors could suffer severely in an inflationary climate because interest rates are still relatively low. Buffett has noted that buying a 10-year bond with a yield of 2% is comparable to paying 50 times earning for a company, with the important exception being that the bond's earnings cannot increase. Whether they are pension funds, insurance firms, or retirees, fixed income investors around the world face a bleak future, he added. Now, as for gold, what about it? Notably, Buffett has avoided gold, a commodity that is frequently seen as being a fantastic inflation hedge. Gold supporters are particularly concerned about how inflation would affect paper money, and Buffett shares this worry. But if you own 1 ounce of gold for all of time, you will still own 1 ounce at the end of it, he said in 2011. Instead, he favors owning valuable assets that produce dividends, income, and food for their owners, such as stocks, real estate, or farms. Cryptocurrencies have recently been touted as the digital equivalent of gold, but Buffett is also very dubious of them. Limit your wants. Charlie Munger, a business associate of Buffett's and vice chairman of Berkshire Hathaway, offers his own suggestions for how to deal with periods of excessive inflation. Munger once said to Berkshire stockholders, "One of the great defenses to being worried about inflation is not having a lot of silly needs in your life. Consider using a budgeting tool to track your expenses to assist with this. You'll have a better understanding of how you now spend your money, and you might be able to spot dangerous spending spurts before they develop into a habit." Grow job skills. Growing your professional abilities and becoming the greatest in your area are 2 of the best ways to protect yourself from inflation. According to Warren Buffett, who made this statement at a recent Berkshire Hathaway shareholders meeting, Buffett stated it's a good idea to be, quote, exceptionally good at something in particular. Why? Because job skills are immune to inflation, unlike money. And regardless of how much a dollar is worth, if you have a skill that is in demand, it is probably going to remain so. Buffett insists that you cannot lose your job skills. Inflation won't destroy them either. Therefore, by making an investment in yourself, you may provide yourself with excellent protection when living expenses rise. That's because you'll have the choice to demand the salary you desire, provided you can demonstrate that you're deserving of a higher salary. So what professional skills should you work on developing? There are various job skills that can benefit from improvement. Consider the abilities that are essential to your particular field of employment first. That can entail learning a coding language that is becoming more widely used if you are an IT professional. Make sure you are knowledgeable on the most recent tax laws and strategies if you are a tax expert. A marketer should also be knowledgeable about current trends. Then there are soft talents, which are transferable to all occupations. Soft talents can include everything from good time management to strong communication abilities. These abilities are also worth developing because they will enable you to be successful in any position you choose. Consider a situation in which you struggled with time management and missed deadlines as a result. Your career development may be hampered by that. However, if you develop superior time management skills, it might pave the way for new chances and perhaps a bigger salary. Additionally, once you develop time management skills in the context of your current career, you can apply them to any future positions. Invest in yourself and be the best at what you do. Buffett advised shareholders in 2004 that one of the best ways to keep your purchasing power over time is to invest in your own talent. The top doctor or attorney in a city or town benefits from an education that was paid for with old dollars, but they are able to charge their clients with today's money without having to retrain. Think about adding a new skill to your resume by enrolling in a local institution or using internet resources. Even while earning higher degrees can be pricey, they can expand your knowledge base and make you an invaluable employee in the long run. Your ability to command your fair share of revenues over time will increase as you become more valuable to your firm and its clients. He stated to CNBC in 2019 that Bitcoin has no unique value at all. Nothing is produced by it. You can stare at it all day long, but nothing like small Bitcoins or anything like that. It's an illusion, basically. Which of Buffett's rules are you implementing in your finances first? Let us know in the comment section below. Don't forget to like, share, and subscribe to our channel for more great videos. Stay tuned.